Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me, as always, is Vivek Iyer. It is a red-looking screen for our own markets today. The midcap's not doing so well, 257 points lower, as you can see at the top of your screen as well. Across the board, there's a tinge of red.
Tinge of red across the screen, on par for the course, given the fact that the kind of rally that we've seen has been quite good. Last week, mid-caps and small caps outperformed quite significantly, but quite a lot lined up on this show today. So let's start off with the top headlines. Stocks trade ranged as valuation concerns square off with expectations of an investor-friendly budget. FMCG, along with oil and gas, notch up gains, while consumer durables and PSU banks drag. Mid-caps under pressure.
FMCG stocks gain after Marico reports an uptick in volume growth and Dabur cites improved demand in rural India. IMD's forecast of better than normal July rainfall also aids sentiments. Stocks gain between 4 to 5%.
Bank of Baroda corrects nearly 3.5% in trade after registering its weakest deposit and loan growth in 12 quarters. The bank has also lost market share in the first quarter.
DOM surges in trade after Axis Securities initiate coverage with a buy rating and target of 2,670 rupees. Says company has emerged as the leading player in the stationery market, and the brokerage expects return on capital employed to improve to 25% in FY27 from 22% in FY24.
Shilpa Medicare in focus after the company bets big on the new CDMO opportunity. The company says that the cumulative milestone fee that they will get is $10 million and the supply should begin from Q1 FY26.
Okay, all right. Those are the top headlines. A couple of them we'll discuss in greater details through the course of the show as well. For the markets, as we've been pointing out, it's a down day. The Nifty is down 50 points. We have the mid-caps, which are underperforming. The Nifty did recover from the lows a little bit, the low that we touched around 12. But from those levels, again, it is seeing some fall back. The mid-caps too down 0.4%. Bank Nifty is the big drag today, 0.6%. So the weakness continues there. Remember, HDFC Bank was the big loser in the later part of the week last week. And today, again, if you look at HDFC Bank, it continues its down move. We have the FMCG space, which is doing well. So a lot of commentary coming in from managements, the rural sentiment, and that continues to keep that particular sector abuzz. But more or less, it's not many gainers today, Vivek. It's a lot of losers that we are talking about.
That's right. The advanced decline ratio is skewed in favor of the declines. Like you mentioned, so what's actually happened is that, the BFSI operational updates haven't been up to what the street was anticipating. IndusInd Bank was below expectations. Bank of Baroda, like we mentioned earlier, was quite weak. But this is our special segment, Mid-Cap Movers, where there will be a lot more stocks on the radar. Hormaz is at the wall. Hormaz, take it away.
People stuck in rain, people stuck in traffic, they'd still want to know market mein kya chal raha hai. So we'll tell you all of that. Start off with the gainers in the broader markets. Then Paytm is the one that is leading the charge today, bucking the trend in an otherwise skewed market towards the declines. Up 9% is Paytm now, 15% in the last two trading sessions. Remember, the stock was up 6% on Friday as well. G Shipping is off the highs of the day, but still trading with gains of around 6.5%. GMDC and JBM Auto also seeing a good day in today's session, gains of up to 6%. The railway PSUs are back in action. It's been a while since we spoke of them, and now they are buzzing. And how? 15% higher for RVNL, 6% for Ircon. IRFC made a new record high in today's session, 7% there as well. And Railtel also seeing gains of up to 4%. There were plenty of initiations in coverage in today's trading session. Plenty of broader market names there. DOMS is off the highs of the day. At one point was up 5%. Is now 1.5% now. Hudco is up around 3%, and Stylum Industries also seeing good traction in today's session. Stocks doing well on the back of volumes, and within those are Metro Brands was also up 10%. So there is a bit of cool off in most of these broader market names. Electra Green Tech now up 5%. HBL Power just signed an MOU. The news came in recently, is up 5%, and Marico on the back of a strong business update up 4%. And some other reactions to business updates, because there were plenty of them. AU Small Finance Bank, JNK Bank down 5%. Ajmera Realty saw that spike after the business update came in, but has cooled off since then. And Dabur too doing well for itself in today's session. Back to you.
Okay, all right. Thank you so much, Hormaz. So that's an interesting list of big buzzers in the broader markets. It's a good time to welcome Jay Thakkar, Head of Derivative and Quant Research at ICICI Securities, for a technical check on the markets. Jay, good afternoon. Thank you so much for joining us. Tell us, what are some of the levels you will be watching out for? 24,272 on the Nifty right now. What is the support, and what would be the next important level to watch?
Hi, good afternoon to you, Sonu. And Vivek, as far as the Nifty is concerned, I would say, Sonal, that on the upside, 24,400 to 500 range is a very clear resistance for this week. And for this weekly expiry, I believe that it's unlikely to take off those levels. And if it managed to take off those levels, then definitely it would be inching towards 25,000 soon. Else, it might just consolidate within a range of say 24,500 to 24,000 on the downside. So unless those levels are not broken, this 500 points consolidation may continue for this week. And as far as Bank Nifty is concerned, so now we can see its consolidation to continue within the range of 52,000 to 53,000 levels. So in this sideways momentum for this week, stock-specific momentum is likely to be going ahead, and I think the breadth may weaken, but then those stocks which are much likely to benefit out of the budget may also perform quite well. A few of them are in the ban period as well. But the stocks which recommendation which I have for today, those are two buy recommendation. The first one is REC. REC and PFC, both of them are continuously forming high tops, high bottom. We are seeing good long additions out there. The momentum is back into the favor of the bulls. The stock is trading around the levels of 612, 613 range. So I think, on the downside now, 598 will act as a very crucial support for REC. Until it doesn't close below those levels, we can see it inching towards 635 to 650, which will be two short-term targets. The second buy recommendation, Sonal, is from the pharma pack. I think that selective pharma names are likely to do good from here on as well. And Alchem, which is trading around the levels of 51.81 right now, it has got a good support around the levels of 5,100 in the very near term. I think with that as a stop loss, one can buy this. It's likely to inch towards the upper end of the range, which comes to 5,400 and thereafter 5,500. These are his two short-term targets.
Thank you so much, Jay. So REC and Alchem Labs, those are our top picks for the day. Let's now slip into a short break. We'll get you more on the markets and put focus on Anantraj, which is buzzing in the session today. This will be part of the mid-cap spotlight segment. Stay tuned. Welcome back to Midcap Radar. As you can see on the bottom of your screen, the monthly life insurance data is out. Three stocks in focus that we are looking at. Of course, there will be LIC, there will be HDFC Life, there will be Max Financial and ICICI Prudential Life. In fact, ICICI Prudential Life has seen a sharp recovery after a quick dip that it took just around 10 minutes back. But let's now focus on Shilpa Medicare. The company today held an analyst call with an update on the CDMO arrangement. Ekta tells us more on that particular development. Ekta, over to you.
Well, yes, it is for a particular NCE or new chemical entity which they have tied up with a company called Kaisiv, and it is basically for a drug which is going to treat kidney problems. Now, they expect an order for 5 million tablets before June 2025. They expect an order for 15 million tablets before December 2025. This particular NCE, to put it into perspective, a patient has to take around 2 tablets a day of this particular drug, OLC, as compared to other phosphate binders which kidney patients need to take, which is generally 8 tablets a day. So the effectiveness or the number of tablets that you need to take would come down with this particular new chemical entity. The pricing decision will be decided by the pharma company in question. They will be filing for the drug in the US initially and then other markets. The phosphate binders market size in the US is more than $1 billion currently. So that's the kind of opportunity that Shilpa Medicare spoke about. Shilpa Medicare will be getting signing approval launch milestones. $10 million is the cumulative milestone fee. Supply should begin from Q1 of FY26. The current agreement is for an exclusive 4 years. They will have a renewal option based on certain riders. They expect margins of 50% and above from the molecule. They expect it to be a substantial revenue opportunity. The capex, according to them, will be set up by the pharma company itself, which will be one dedicated API block. And Shilpa Medicare won't be investing in that. The pharma company will be, which is worth around $6.5 million.
Thank you so much for that, Ekta, for putting and giving us more details as far as this particular opportunity for Shilpa Medicare is concerned. Remember, the stock was a sharp mover on Friday. Today continues to hold on in the green. The next stock on the radar is Anantraj. In fact, the stock has surged more than 80% in 2024. In our special segment, Mid-Cap Spotlight, Sonal, you're focusing on Anantraj today.
Oh yes, so the stock has done really well. It's at a fresh 52-week high today. The stock is up 84% this year itself. And I just was looking at some of the factors that could have contributed the kind of surge that we've seen in the stock so far. First up, about the company, it is a real estate player in the NCR region and has a substantial land bank of around 312 acres. The company is also venturing into the data center segment, and that could possibly be the reason why we are seeing that big spike because the street is thinking of that as an opportunity as well. So what is working? The data center foray. Now, we have heard from a lot of companies, be it Cummins, be it ABB, all of them talking about data centers being a big opportunity, a big market as well. The company has total proposed capacity of 307 megawatt, after which they've already operationalized 3 megawatt. In Q1 FY25, another 3 megawatt, and in Q4 of FY25, they will be operationalizing around 22 megawatts. This is coming in from the annual report. Additionally, their core business, the residential business, is also doing well. Their pre-sales, there was a big surge, 2,800 crore rupees versus 700 crore rupees. This is as on FY24. The company says they have ongoing and upcoming project pipeline of 9.1 million square feet as well. And there was a recent note by DAM Capital where they have given some of the parts for these different businesses. And here the data center SOTP is much higher than commercial for sure and higher than the residential business. That is the core business also. It's at around 299 rupees a share. The land bank is huge. So they are ascribing around 74 rupees per share to that particular asset as well. Now, let's talk about the shareholding pattern. The promoters hold around 60% stake. There are some life insurers as well, like Kotak Mahindra Insurance Company, 1.2% stake there. Tata Indian Opportunities Fund holds 1.28% stake here. The Elm Park Fund holds 1.4% stake here. So there are certain triggers that the street is watching out for, data center being one of them, and the huge land bank as well, that street was always bullish on. What they do with it is something that they'll be watching out for. But yes, that excitement continues, and a new high for the stock today.
You're absolutely right, and a couple of initiating coverage notes, like you just mentioned. Of course, there's been quite a lot of interest as far as the entire Delhi NCR region is concerned. But as the union budget nears, a whole host of railway stocks are buzzing in trade. So I've done a little bit of analysis on what exactly is happening with these stocks. You can't ignore them simply because of the fact that you're actually seeing the monthly moves.
Yeah.
It's been really spectacular. So first up, we've taken 3 stocks. Which are the 3 stocks? We've taken the 3 railway PSU EPC stocks. So RVNL, IRCON and RITES. In the last 1 month, these stocks, RVNL is up 46%, IRCON is up 28%, RITES up 18%. Let's look at how they've done over the past year. Last year, RVNL, just in the last 1 year, it's up 4.5 times. IRCON up almost 4x and RITES up 2x. So, been significant rewarding in terms of shareholders, who've actually held on to the stock for a year and a half. Now, in terms of the valuation, first thing to note is that there's not too much sell-side brokerage coverage as far as these names are concerned. In fact, only one brokerage covers this, and that's IDBI Capital. IDBI Capital for FY26, their EPS estimate for RVNL is 9 times. So at the current market price, RVNL trades at 61 times FY26 earnings estimate. IRCON, for the same period, that's FY26, trades at 32 times, and RITES trades at 34 times. Now, coming to the order book, remember, order book for these names are quite large, but also important to note that these companies typically work on very low EBITDA margins. So RVNL has an order book of 85,000 crore, order book targeted for FY25. The guidance that the company has given is close to 1 lakh crore. Order inflows for this particular year seen in the range of 20 to 25,000. Revenue growth for FY25 seen at 5% over FY24 levels. That's close to 22,000 crore that the company did in FY24. PAT growth seen at 10 to 15% over FY24 levels. The PAT for FY24 was in the range of 1,600 crore. Now let's move on to IRCON. IRCON, has an order book currently of 27,200 crore. What is the guidance that the management has given? Largely flat. Last year they ended in the range of 12,330 crore. Order inflows seen in the range of 10 to 15,000 crore. Revenue growth of 10% the company says they could see in FY26 if order inflows materialize. EBITDA margins expected to be in the same range, so just around 7%. PAT margins expected in the range of 7 to 7.5%. And lastly, coming to RITES at the end of FY24 didn't really give a top line guidance, but they give more of an EBITDA margin guidance. EBITDA margin seen largely in the range of 25 to 27%. Historically too, it's typically been in this particular range, 26% in FY24. PAT margins too is expected to be in the range of 20%. So what you're actually looking at this point of time, after the move, these stocks are trading at pretty expensive valuation, even at FY26 basis.
No doubt about it. Expensive valuations. And look at the moves that we have seen. RVNL was up 20% on Friday. It's up 15% yet again. Oh. No fresh triggers, of course. It's like the next defense story, right? These stocks are just surging. And while we are talking about budget, we have to talk about earnings as well. Shalby, by the way, has reported its Q1 earnings. Net profits are down 20%. Revenues, though, have increased by 18%. So the EBITDA margin number will be important to track. The stock, though, is down 5.5%. There's been a sharp fall from the highs as well. So the EBITDA margin number will be important to calculate on that one. So far, going by the net profit, there's a sharp decline from the highs on the stock price right now. We'll get you more details and analysis on Shalby for sure. Let's slip into a break. When we come back, we'll get you more on the markets and put focus on Stylum Industries. That stock is buzzing in trade. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's talk about Stylum Industries. The stock is surging in trade after Equirus has initiated coverage on the stock with a buy rating. Manglam is here with the details. Manglam, a lot of initiating coverages on the stock.
A lot of initiating coverages indeed. In fact, a couple of weeks ago, we had a coverage coming in from Investec, and now there is Equirus, which has written. And while the overall broad thesis is similar to that, their target price is closer to 2,500 rupees, and they have initiated coverage with a buy rating or a long call, as they call it in their terminology. The thesis is pretty simple. Over the last couple of years, the company has been among the top 4 manufacturers of laminates with a market share of almost 8%. The second largest laminate exporter, where the exports market share is close to around 19% itself, and exports contributes about 2/3 of its revenues. So almost 97% of the company's revenues comes in from laminates, and also has presence in acrylic, solid surfaces and pre-laminated MDF. So increased capacity and increased exports could be important triggers for the company going ahead. Over the last 10 years, they've grown faster than the industry. So, on a revenue CAGR basis, the company's revenues have compounded at around 17%, EBITDA at around 25%, and as a result of which the bottom line at around 34% over the last 10 years. So with that, they believe that this runway could continue with the company's strong export focus, rising share of value-added products, which could be margin accretive. They've added capacity in laminates business, so that would be important as well. And from a balance sheet standpoint, they are debt-free, so that would be positive too. Equirus has built in a revenue CAGR of 18% over the next few years, EBITDA at 15% and net profit at 13%. Quite a difference from what the company has been doing over the last 10 years. But even if you account for these numbers, they have valued the company at 25 times 1 year forward earnings, and hence they come at a target price of just under 2,500 rupees.
Thank you so much for that, Mangalam, for putting the spotlight as far as Stylum Industries is concerned. Let's now focus on Dhanlaxmi Bank. The company registered weak loan growth in the first quarter while also losing some market share. The gold business, however, showed strong growth. Earlier today, we spoke to Ajit Kumar KK, the MD and CEO of the company, and discussed the company's growth outlook going forward. Listen in to what he had to say.
Our expectation is that it is definitely going to be somewhere around 3. It will be less than 3% for the current year, and the net NPA also will be less than 1%. That's what we look at for the current year. Since the last 2 years, every year we had seen a 1% decrease in GNPA. This year also we expect a more than 1% decrease in GNPA, as well as the net NPA coming down to less than 1%. Maybe after a very, very long time. The expectation is that from the current level of around 3.2, I think we expect it to go up by another 20 basis points, maybe somewhere around close to 3.4. That's what we look at.
Okay, all right. That's the word coming in from Dhanlakshmi Bank. DOMS Industries, that is the stock on our radar, gained after Axis Securities initiated coverage on the stock. A lot of brokerage notes which are moving stocks. Upasna is here with all those details. Upasna.
Thanks so much for that. Axis Securities has initiated coverage on DOMS Industries. It says that Indian stationery and art material market has seen continued growth over the years, and it is expected to grow at a 13% CAGR over FY23 to FY28. DOMS Industries has emerged as a leading player in the Indian stationery market, holding an overall market share of 12% in FY23. It expects companies' EBITDA margin to be in the range of 17 to 18% for FY25 to FY27, driven by various factors such as increased capacity utilization, improved product mix, stable raw material prices, and improving on-ground execution. In terms of ROC, the brokerage says that it is likely to improve from 22% in FY24 to 25% in FY27. It also expects a robust revenue CAGR of 25%, EBITDA CAGR of 26%, and PAT CAGR of 28% over FY24 to FY27. It also says that with improved visibility in earnings growth and a strong return profile, the stock appears attractive in the mid-cap space. Hence, the brokerage initiates coverage on this stock with a target price of 2,670 per share.
Thank you so much for that, Upasna. The next stock on the radar, the next company on our radar is Man Industries. The stock fires up in trade after it won an 1,850 crore order. This is for line pipes supply. Earlier today, we caught up with R.C. Mansukhani, the chairman of the company. He tells CNBC-TV18 that he expects 20 to 30% revenue growth in FY25. Listen in.
Revenue, we have changed from last year 3,200, and it should be roughly 20 to 30% growth expected current year. And the next year, because of our other companies also going to start some projects, we are coming up in Jammu and some in abroad. So all will come in the 25, 26, which we are expecting 100% growth. Approximately, we are trying to achieve 100% growth in next 2 years. Blended number will be 25, 11 to 12%. And 25, 26, we will try to maintain more than 12, average out should be 12%+.
All right, that's the word coming in from Man Industries. The stock up 6% in trade today. With that, we'll take your leave on this edition of Midcap Radar. Your stocks when we return.